Security analysis refers to the method of analyzing the value of securities like shares and other instruments to assess the total value of business, which will be useful for investor to make decisions. These are three methods to analyze the values of securities. First is fundamental, technical, and quantitative analysis. So these are three analyses to help to analyze the securities. So what is the securities? Securities are broadly categorized into debt securities, for example banknotes, bonds, and debentures. Equity securities, for example common stocks, derivatives, for example forward, future, option, and swaps. So this is all about the securities. Now, types of securities. There are top 3 types of securities analysis. The securities can broadly be classified into equity instruments like stocks, debt instruments like bonds, and derivative instruments like options, or some hybrid, that is convertible bond. Considering the nature of securities, security analysis can broadly be performed using the following 3 methods. First one is fundamental analysis. Second, this type of security analysis is an evaluation procedure of securities where the major goal is to calculate the intrinsic value of a stock. It studies the fundamental factors that affect stock's intrinsic value, like profitability statement and position statements of a company, managerial performance and future outlook, present industrial conditions, and the overall economy. Second one is technical analysis. This type of security analysis is a price forecasting technique that considers only historical prices, trading volumes, and industry trends to predict the future performance of the security. It studies stock chart by applying various indicators like MACD, Bollinger Bands, etc. that we will study in next topic, assuming every fundamental input has been factored into the price. And the last one is third, that is quantitative analysis. In this type of security analysis is a supporting methodology, fundamental and technical analysis, which evaluates the historical performance of the stock through calculation of basic financial ratios, for example EPS, earning per share, return on investment ROI, or complex valuation like discounted cash flows for DCF. Why analyze security? The basic target of every individual is to increase its net worth by investing its earnings into various financial instruments, that is, the creation of money using the money. Security analysis helps people achieve their ultimate goal. As we are discussing here, the first one is returns. The primary objective of investment is to earn returns in the form of capital appreciation as well as yield. Now second one is capital gain. Capital gain or appreciation is the difference between the sale price and purchase price. Third one is yield. It is the return received in the form of interest or dividend. Return is equals to capital gain plus yield. Now fourth one is risk. It is probability of losing the principal capital invested. Security analysis avoids risk and ensure the safety of capital also creates opportunities to outperform the market. Now, fifth one is safety of capital. The capital invested with proper analysis avoids chances to lose both interest and capital. Invest in less risky debt instruments like bonds. Now, sixth one is inflation. Inflation kills one's purchasing power. Inflation over time causes you to buy a smaller percentage of goods for every dollar you own. Proper investment provides you hedge against inflation. Prefer common stocks or commodities over bonds. Now the seventh one is risk-return relationship. The higher the potential return of an investment, the higher will be the risk. But higher risk doesn't guarantee higher returns. Keep it in mind. Now, eighth one is diversification. In diversification, there is a very famous quote: don't put your eggs in one basket. It means don't put your all money in one company shares. You should invest your money in diversified investment avenues. Fundamental analysis. So, what is the meaning of fundamental analysis? Fundamental analysis, its meaning is it is a method that is used for measuring the intrinsic value of a stock or security. It mainly depends on the economic factors affecting the business and the financials. This process is not only limited to company's financial structure, but it goes beyond that. It includes the general economic scenario, the industry growth and fall, along with the company's organizational structure, management and financial. So it is a complete study of business venture to analyze its actual worth than to measure its shares' intrinsic values. So this is the meaning of fundamental analysis. Now the next is foundation of fundamental analysis. In foundation of fundamental analysis, intrinsic value before understanding the three elements of fundamental analysis. It is of paramount importance to understand the concept of intrinsic value. The whole process of fundamental analysis is based on the intrinsic value. The intrinsic value is the actual economic value of a company or an asset based on an underlying perception of its true value, including all aspects of business in terms of both tangible and intangible factors. This value may or may not be the same as the current market value. This value indicates whether stocks are undervalued, overvalued, or correctly valued. Criteria for investment decision. First, if intrinsic value greater than market price, buy the security. Second, if intrinsic value less than market price, sell the security. Third, if intrinsic value is equals to market price, no action. So this is the criteria for investment decision as per the fundamental analysis. The next topic is the three-phase examination of fundamental analysis is also called as an EIC. E for economic, I industry, C company analysis framework or top-down approach it is also called. Now next is types of fundamental analysis. There are two different fundamental analyses, are quantitative and qualitative. So fundamental analysis stocks that involve brand value, the financial performance of the company, management's decisions, and other similar factors can be termed as a qualitative approach. So this is all about qualitative fundamental analysis. Now second one is quantitative. In quantitative approach includes numbers. It analyzes the numbers in the financial statements and draws a conclusion about the price of the shares from there. Though both approach is different, both are equally important in a complete analysis of a company's share price. Apart from these two, there are two different processes of fundamental analysis. The first one is top down and the other one is bottom up approach. Top down and the bottom up approach. While the top down approach looks into macroeconomic factors first and then digs into the specific company. But the bottom-up approach analyzes the company first and then check the effect of the macroeconomic factors on the company's performance. Next topic is basics of fundamental analysis. What are the basics of fundamental analysis? Fundamental analysis strategy. There are few fundamental analysis basics which leads to company revenue and its structure, growth of the revenue over the years, profit made by the company in the past years, debt structure of the company, rate of turnover, employee, management, and management approach towards the employees. There are 6 basic factors that are looked at while doing fundamental analysis of any security. This is required to determine the intrinsic value of the stock and it is rightly priced at the market or not. Now next topic is how to start fundamental analysis. There are few basic steps to start this analysis and the steps are: first, for preparing the fundamental analysis strategies, you first need to understand the company value. Next, the second step is to use financial ratios. The ratios are the primary source of information required for this analysis. The third step is to study the financial and annual reports of the company. And the fourth step is also about reading the annual reports but of the rival companies. Next step is to compare the company's debt structure with its peers and rivals. Finally, you need to analyze the prospects of the company to find out its worth.